Before we start the show, I'd like to thank iTrust Capital for being a sponsor. iTrust is a crypto and precious metals IRA. They offer a wide variety of crypto assets. There are no setup fees or monthly fees, and transactions are only 1%. The combined annual contribution limit for Roth and traditional IRAs is $6,000 or $7,000 if you're age 50 or older for the 2021 and 2022 tax season. You're able to trade your assets on the iTrust platform 24/7, 365 days a year. iTrust uses state-of-the-art custodianship by Coinbase Custody and Fireblocks. If you use the link itrust.capital/Darren, you can get up to $100 in a funding reward just by using the link. So be sure to check them out. Hi everyone, welcome to the show.
And what that means, first of all, there's a U.S. ban on imports. There's an EU ban on imports, and then there's the U.S. and the EU, but primarily the U.S. actually imposing an oil export sanction on Russia in various grades of impact. If the U.S. simply imposes an import ban, that's a sort of a big deal, but it's not as big a deal on the global market because really the U.S. only imports a relatively small amount of oil from Russia, and if they're allowed to export elsewhere, then again, systemically, it's not a huge thing. That doesn't mean politically it wouldn't have a significance here, but it doesn't mean it's a systemic thing. If the EU comes along and does something similar, that's a big deal. Because although the U.S. and the EU are not the sum total of Russia's export market, combined, that is a big export market for Russia. That's going to have a big impact. But it's going to have a big impact on Europeans and Americans as well in their individual lives. That's why politicians have been very reluctant to go there. If we take that final step and we actually put a sanction on the export of oil from Russia, that means you're sanctioning their exports to anywhere in the world. And then you run into some questions about whether the Chinese would or would not abide by it. It's a bigger deal still. But in various levels, it's big, bigger, and biggest. And if we start going down that route, there's going to be a significant impact on Russia and a significant impact on oil prices.
So this is before the president just sanctioned Russian energy, as well as Vladimir Putin also has banned commodity exports in Russia, with going through the approval of the Russian Federation. So Russia is one of the top commodity producers in the world. They supply 60% of the energy to Europe. Now, if this gets cut off, if Russia decides not to allow energy to get to Europe, Europeans need to buy oil on the Western market, which would cause oil prices to spike higher. Now, this is a Credit Suisse report by a market analyst named Zoltan Pasar, and Zoltan wrote a report on a new Bretton Woods 3 system. And what he's saying in this report is there's a crisis unfolding in the commodities markets. The commodity markets had very tight spreads. There was no gap between commodity prices. It was very small gap prior to this. Now, the Western markets commodities have completely decoupled from Russian commodities, and Russian commodities are undervalued while Western are surging in price. So there's this huge gap while commodity trading houses, commodity traders, there's going to be margin calls, there's going to be all types of disruptions in this system. And he compares us to Lehman Brothers with credit default swaps and subprime mortgages, where he's comparing Russian commodities as the subprime, while the actual commodities in the West are prime mortgages, and that gap's going to lead to all types of trouble in the financial system. And this is more on the supply side because of those gaps. And it's going to be very difficult for the Fed to do anything because the Fed can't purchase any type of credit in the Russian commodities, right? They can't give out loans to make this system work fluidly. There's going to be the Fed's going to be put into a corner where they can't really do too much except for in Western markets, and all they can really do is put a liquidity backstop. And this problem's not exactly liquidity; it's supply demand. That's the problem. Now, the commodities are collateral. So if you have this gap in prices, right, and your collateral is extremely cheap on one side and extremely expensive on the other side, this is where commodity houses could fail. Now, the People's Bank of China is in this unique position where they can purchase Russian commodities at a discount. And this will cause the yuan to be the lender in the Russian markets, and then their currency will ultimately be backed by a basket of commodities. And they could do this two ways. They can fund this by dumping U.S. treasuries and putting those loans to work in the Russian markets, which would cause our yields to spike, and which would be a big recipe for inflation as well as economic crisis if our yields start spiking. So they could either do that, or they can print yuan and just fund the operations that way, and they create a yuan euro system versus the euro dollar system. And on top of all of this, so we're set up in the West for massive inflation, just dealing with this type of crisis. China would have to use up most of the shipping in this process. So oil can't just be stored on the land, right? That there's a certain amount that can be, and then there's ships off seas that will come into the ports and fill up as the oil's being used. So they would use up most of these ships, and then the cost of shipping will spike. So when we import goods, to import we'll need ships, and that will be more and more expensive. So they would buy up all of the oil from Russia and lock up all the ships in the world, so we wouldn't be able to actually purchase the ships at a reasonable price. There'd be supply-demand dynamic behind that. Now, this is all bad for purchasing power. Food goes up, everything that you import goes up, and the People's Bank of China takes away a lot of demand from the global economy for dollars and puts it into yuan in this scenario. So he's saying that this could potentially happen. Yuan's set up to the Chinese currency yuan is set up for a yuan euro system versus a euro dollar system. And if Bitcoin still exists, it will probably benefit from all of this. So if you want to read this report, I'll put in a link in the description below. Now, this is ConocoPhillips CEO. Listen to what he has to say.
$1 million or two off the market, the price is going to continue to go up. That's how thinly balanced the system is today. And all eyes are looking at the OPEC Plus group, or the OPEC group, how much spare capacity is there to satisfy that demand if we take the supply off the market.
Well, we know there is not a lot, but there may be some OPEC Plus.
Right.
We chat. We're lucky to talk to some of them. The Secretary General of OPEC is here, Mohammed Barkindo. Mohammed, if you're around, please come on over. Do you think the Saudis have the ability to put more oil on the market right now?
Well, I think not in the short term. I think, again, it's a longer term question. And that's the one message I would have for the administration today is I know we're focused on the short term and trying to send a message to Mr. Putin and what's going on in Ukraine, but we need to be thinking about the medium and the long-term impact. If this lasts for a while and we continue to stop the exports, it's going to have a material impact on the market for a longer period of time, and we need to think about that.
John Hess this morning told us that he thinks that the U.S. and the IEA should have a coordinated 120 million barrel release of the SPR next month, another 120 million barrel release the month, so 240 million barrels in 2 months. I was a little surprised to hear Mr. Hess say that. Would you agree with that?
Well, I think it can help alleviate the short term. But again, Brian, the longer term, it's really a question of what are we going to do for the next 6 months? What are we going to do for the next year? And are we planning enough to say what are the scenarios that could develop over that period of time? And what are we going to do to ensure energy security as a country and as a globe? And releases out of the SPR for a month or two or three, they'll help the short term, and they're necessary to do that, but they don't answer this longer term question.
The president in his talk, and again, I want to be clear, people just joining us, you did not hear it, you're in a panel. Thank you for graciously kind of hustling out here. The president did throw the ball back in your court. He said your industry is sitting on something like 9,000 leases of federal lands. You're shaking your head that he's basically telling the American people you guys should be or could be drilling more. I'll let you respond. It's not how it works. You don't just tomorrow So give us the idea of how this
Yeah.
actually occurs.
So I tell the president it's a terrible talking point, Brian. Let's get off that. What we need to focus on.
Why is it a terrible talking?
Well, because we have leases. They take a long time to develop. We'll drill on those leases when we do the geologic work, when we do the engineering work, we understand where to go drill, then we go drill those leases, and they come up. So you got to have a pipeline of leases to perpetuate the business over the long haul. So there's always going to be some leases that are undrilled. That's not the measure of what this industry is doing. Today, we'll grow probably this year from entry to exit 800,000 to 900,000 barrels a day. The industry will grow in the U.S. by 800,000 to 900,000. You look forward to next year, probably going to grow that similar amount. And if these prices persist, there's going to be plenty of money to invest into capital and still generate the adequate returns we need to run in the business and give returns of capital back to our shareholders.
Because at the same, I mean, just kind of.
So the supply chains for energy are inelastic. You can't just, whip up oil out of nowhere. There needs to be geological studies. There needs to be engineers that figure out how to pump the oil out of the ground, where to store it, the pipeline setup. So in the near term, there's a lot of issues, and it's not as easy as just putting more supply onto the market. And what he's saying is this is going to take months and months and months to actually start producing more oil, and on top of that, it's probably not going to be enough. So in other words, energy's got to go up in price for demand to break. So for you not to want to use oil, you're going to have to, it's going to be cost ineffective where you don't want to purchase it, and then the supply-demand balances out. So this is Blockworks, and they had two hedge fund managers, energy traders. Listen to what they have to say.
Things are happening, but the bottom line is, if we were to move forward with those sanctions, the gap that would open up, we talked about 1.5 to 2 million barrel a day gap pre-invasion, that probably lands us, even with a number of favorable assumptions, somewhere around a 4 million barrel a day gap. If we were to pull those sanctions off, China was to uptake an increasing crude from Russia. We were able to lean on Saudi Arabia and the UAE to increase production. We could get some Iranian production back. All these levers are pulled. We're still best case scenario, 3 million barrel a day gap, probably more like a 4.5 million barrel a day gap. And that's kind of an unprecedented place to be. This is usually a finely balanced market, the crude oil market. And so what happens is the only balancing factor, once we pull all those supply levers, is the only balancing factor is demand. So at that point, we have to go to a place where the price of crude oil breaks the back of demand, which is a nice way of saying we go into a recession. And so that is that's the lay of the land. If we go forward with energy sanctions, we spoke before the podcast here, the interview, and I think it's like there's no ceiling on where oil could go in that scenario. To me, it's just like the exact opposite of what we saw coming into COVID. It's just we went to negative $38 a barrel during the darkest days of the COVID crisis in March. We could do something similar on the upside. You have to remember that as far as where we could go, but that would be a momentary blip. Coming out of this, I think a lot of long-term trends are likely to change. And as investors, I think it's fun in the here and now to talk about where could oil go. There's no ceiling, everyone gets caught up in the excitement and the panic and all the other things, the emotions that go around right now. But I don't see a clear path to getting back to normal. And I think that coming out of this, we're going to have society is going to have a larger appreciation for energy security, for a more coherent and cogent energy policy. And to me, that means that there's a better than 50% chance that we end up with re-rating of energy equities and a whole host of other things that will impact investors in portfolio managers, asset allocators going forward.
Tracy, what do you make of Warren?
Okay, so prior to 2008, oil energy spiked in price, right? And what happens is manufacturing, factories need energy, shipping needs energy, everything needs energy. So if the price gets too high, then the cost to do business becomes too high, and people start shutting down. So this is indicative of a recession, because there's less demand for energy as the prices keep getting higher and higher, and less business is conducted. Economic activity drops.
Well, because it's the threat of this may happen, right? It's the markets being unsure. I mean, if we look at the sanctions that we've imposed on them so far, I mean, sanctioning oligarchs and things like that is kind of more of a political gesture than anything else that really hurts Russia, right? The banks and the central bank, I mean, that's a big deal, but, there are ways around SWIFT for them. They've already made some deals with China. So, we're putting the screws to them, but, really, oil is the biggest weapon that you could possibly use, just because they're the number 2 producer in the world. They produce over 10.1 million barrels a day. And that's a lot of money, right?
Yeah. I want to put up a chart that you have, Tracy, just of how big of a producer Russia is. So it's oil, natural gas, and thermal coal. It seems like when it comes to natural gas, it's only a 6. Russia only produces 6% of the world's natural gas. Am I missing something? Yeah,
no. I mean, they're a big natural gas producer, but their biggest customer is Europe, right? So it all goes to Europe.
Yeah. Okay. So can you just walk us through how that causes such a big dislocation? And maybe we can move on to this next chart, which is just the product inventories over time, 2019, 2020. 2021 and 2022, you see a huge spike up in 2020, but now in 2022, we are this thin blue line at the bottom, and it just looks like it's going closer and closer to zero. What's going on here?
Yeah, I mean the supply, again, it's a supply demand problem. We've had 7 years of no capex in the industry, basically, or declining capex. No, oil producers, they want to keep. These oil companies want to keep their investors at this point, right? Investors got burned twice in the past. And so, right now they're trying to, focus on capital discipline, free cash flow, dividends, and stock buybacks to keep investors. And if, when you listen to some of these earnings calls, these Q4 earnings calls, most of them said, we're willing to spend enough money just to keep production flat this year. We don't want to go crazy. And so, and then after after we locked down the economy and, the bottom fell out of everything, demand came back a lot faster than we anticipated. And on top of that, we're even seeing, demand in the United States is now higher than it was in 2019. So, the demand is there, supply is just not keeping up. And you can look at some like OPEC, right? They're, even though they keep incrementally adding 400,000 barrels per day, they're not able to produce that much. They just don't have the spare capacity right now. So they're at 146% compliant. So it doesn't matter if they keep adding barrels on paper, they're just not actually able to produce that much.
So back to the Credit Suisse report, right? The commodities on paper aren't matching the commodities in the real world, and this is a huge supply demand imbalance, and it's going to cause oil to surge in price. So I found that pretty interesting. Now this is digital currencies at the Hoover Institute. There were people from the Treasury speaking. There was all different types of people speaking. These high level people from the NSA, Secretary of Treasury. Just like a think tank that spoke about digital currencies. So I want to play a couple of parts for everyone. Listen to this.
Arena, and I think the United States and other countries should not be promoting that. Now, that doesn't mean to say that CBDCs won't be used for cross-border payments, and there needs to be guidelines or, let's say, standards set for how does one CBDC talk to another, or how does a CBDC exchanged for fiat currency or bank deposits in another economy. We don't have any such international standards. That's one of the reasons that this takes up a lot of space in chapter 5 of our report. We really think the United States should first have the technology available so that it can speak credibly and know about what it's saying, and secondly, lead in the setting of those standards. Again, I would say that private digital currencies should be considered at the same time. That's a form of cross-border payment that could become just as important. I think it's actually one of the best use cases for stablecoins today, because the correspondent banking system for cross-border payments is extremely expensive and frustratingly slow. I'm sure many people have tried to send a payment to their auntie in Torino or some other country and found the incredible difficulty and expense of doing that. And stablecoins provide a very, very convenient way to do that.
So that's Patrick Duffy. Patrick Duffy is, I believe, a professor, and he spoke at congressional hearing. He has the ear of Congress. He has the ear of influential people in this world. And he's saying one of the biggest pain points is correspondent banking, and it looks like the private sector is able to help that out the most. So he's also advocating for the Fed to actually make a Fed coin. Now this is, I forget his name, but he's from Libra, the Facebook DM Association, or ex-Facebook DM Association. Listen to what he has to say.
Identity solution. I frankly think if the government set a rule that said we're going to require a certain level of transparency for the private sector to get in there, the private sector will do it, because it's not an insolvable problem, and it's the amount of, frankly, the amount of resources that the reward for being the winner in this space is astronomical in a private sector sense, which is why all these venture capital firms are raising billions of dollars to deploy. So I think that, challenging the private sector to say, look, you guys should try to solve this is the right way. I don't know what the answer is. Certainly, I'm not a technologist, as you know.
Daryl, we're at noon. Any final words or thoughts? No, okay. I want to.
So if the private sector solves these problems, the upside is astronomical for the private sector, right? So all these countries are developing CBDCs, and they figured out certain ways to swap CBDC1 for CBDC2. I think China is working with Hong Kong for an MCBDC bridge, and it just kind of atomically swaps the currency for currency. But if you think about what's going on with sanctions, what's going on at the global level, those require trust, right? The swaps require trust, and there is a relationship between China and Hong Kong, and they're able to have some level of trust. Now, when we get into the global stage where, everyone's worried about sanctions, everybody's worried, about currency manipulation, there's a real need for trustless systems on the cross-border level. So everything that's happening right now, I think we're going to move into decentralized, trustless technologies where, governance will be decided by all the participants of those platforms versus, just having trust in the US dollar. So that's the world we're getting into. Here's another part from the ex-Treasury. Listen to what she has to say.
A digital dollar that could preserve our ability to use this tool.
Yeah, I worry about that tremendously. I used to say this all the time when I was at Treasury, right? If we don't have, we're not financially, if the U.S. isn't financially integrated into a particular country because for many different reasons, then the impact of our sanctions are very low. I mean, it sort of depends on how you build out the program. But I was once in Uganda, and a Ugandan official said to me, "What about these sanctions? You sanction these people; they come out of the bush, they go back into the bush." His point was like, if we don't even have access to your financial products, the sanction isn't going to do anything to anybody, and that's why the whole piece where we're at this crossroads, right, is so fundamentally important. Because if we don't enable financial technology companies, if we don't ensure that so much of this digital asset crypto economy is growing out of the United States, which will continue to give us a lot of different insights and leverage. And our banks are not operating in those parts of the world. And without a doubt, the economic leverage that we get is going to be severely diminished. It already is.
Raghu, any?
All right, so she brought up some areas of the world that correspondents have cut off relationships with. It's just simply too much cost, and we need to innovate in order to reach those areas. And that's also what Ripple XRP is up to, is they're finding liquidity in those areas that have been cut off by the correspondent banking network. And today the president signed an executive order to push regulators in this direction of regulating crypto assets, and it was very positive for people that want to work in the industry in a responsible way, so that it looks like they're going to regulate out frauds and things to that nature while keeping responsible innovation. So that was good news. Now this is Jack McDonald from PolySign, and listen to what Jack has to say.
Just consistent evolution of adoption. More and more traditional asset managers, the pensions, and the endowments, but first movers really being hedge funds, family offices, and RIAs. You'll see an incremental 20 or 30% of those dipping their toe in the water by year end. I think that's what you're going to see. And I have increased confidence, and I have a cat's, what's the analogy? A bird's eye view of that, because of the type of clients that we're seeing day in, day out, particularly through the Cowen introductions and our biz dev team. So we get the benefit of talking to these institutions every single day. And I can tell you they're moving well beyond just the crypto curious, and actually putting in place the infrastructure that's going to be required. You mentioned it earlier on the regulatory compliance side, but also just from an operational due diligence side.
All right, so these investment firms are setting up the critical infrastructure that's needed to actually utilize crypto, right? So they're not just, speculating on Bitcoin's price. They're setting up the infrastructure to use crypto, and he would know, right? He's from PolySign. There's some large heads that are part of PolySign, and he's got relationships with banks and everything, and he's saying that they're moving forward and they're setting up the critical infrastructure. So this is Deaton on Tony's show. Listen to what Deaton has to say.
You have a great perspective, and obviously understand the legal workings of what's happening overall. This is a tough question to ask, and it may not be a fair question to ask, and it is speculating. Do you see a resolution this year, and as far as outcomes, do you see it a settlement, or something different?
I see a settlement. It's hard for me to imagine that it's not going to be settled. Everybody is in a rush, and I get that. Mm-hmm. Do I believe the settlement is going to be soon? If your definition of soon is 30 to 60 days, then no, I don't believe that it will be. I could be proven wrong. I hope I'm proven wrong, but I don't see that. I stand by what I've always said, which is, Tony, until the SEC has to settle, they have to have something that they're risking. It's very similar, and Jeremy Hogan and other lawyers who litigate will tell you this. My clients, right? I represent mesothelioma clients. That's the asbestos cancer. Yeah. Tony, 95% of those cases settle without ever seeing a courtroom or a jury. Of the 5% that start, 90% of them settle during the trial. But a company doesn't settle with me until they have to. I have to get a trial date, and the court has to hold it. When they have this hammer where they got to start paying a whole bunch of money to lawyers to represent them and defend them, right? And now there's a jury that's going to come in, and who knows what a jury could do. A jury could whack them for 5 to 10 million, right? When they have that kind of uncertainty, right, a risk, they settle. Same thing.
All right, so the SEC they want to sue these crypto companies that are actually, securities, and if they lose this case, they might not be able to do that. So Deaton's saying when you get up to that point, and they're not, it looks like they might lose, that's when they settle. So I believe that's coming, and we'll just have to wait and see. I wanted to mention PDX coin. PDX was a petro coin that was for oil. And a while back that they announced that they were working with XRapid to facilitate these payments. So I believe that the actual token was on the Ethereum blockchain, and they used XRapid to settle their transaction. So I found that relevant with what's happening today in Venezuela for oil and everything that's going on today. So I hope you guys enjoyed this video. Please tell me what you think in the comments below. Please like and subscribe. Thanks, everyone.